Here we go. It's happy hour time. I feel like I should have some intro music. Maybe I need to hop over to Suno and create a intro. I do have my little elf on the shelf joining me today for the last happy hour of 2025. So pretty excited to see everybody. Looks like we've already got someone in the waiting room. Awesome. Sean, let's go ahead and bring you in, my friend. Let's see. Click. Hello.
How are you?
I'm good. How you doing?
I'm doing good. Doing good.
Awesome.
I figured I'd sneak in this time.
I appreciate that. I'm hoping Uncle Sean will drop some insight on what happened in 25 that bankers should care about and what's going to go on in 26. I am excited. So you may have some thoughts on that.
I had a little bit of reverb there. Hopefully that doesn't continue. Go ahead and repeat that for me.
I was just going to say, I'm hoping that you are going to be sharing us some what happened in 25 that bankers should care about, but what's going on in 26. So
yeah, for sure.
Yeah. So good deal. So while we wait for folks to join, welcome to the LinkedBanker Happy Hour event. These are completely unscripted. They are completely ad hoc. It really depends on who all shows up, what you want to talk about, and where the conversation goes. But they are intended to be opportunities to just share and chat and swap info, meet some cool new people like Sean and others that will come up. I know there are a handful of other folks that I've talked to that are hopefully going to make it. I've been talking literally all day long today for the Graduate School of Banking's AI Innovation Series. So we wrapped my session today at 4:00 Eastern, and it's 5:00 now. So I had an hour to take a quick break, and I'm going to look forward to letting Sean talk for a little bit and give my vocal cords a little bit of a rest.
Which graduate school of banking are you at right now?
So it's the GSB Madison.
Madison, okay.
And there's an online program that we're doing. I think Neil Stanley might be hopping on. He's doing a session tomorrow. But it's an entirely online delivered seminar. We've got 9 sessions that we're doing, and 2 hours a day, twice a day for Monday or for Tuesday, Wednesday, Thursday, and Friday. And then, the 80 banks, I think close to 80 banks, and probably each session's had at least 200 individual bankers joining in the sessions live. So it's been really cool going through a lot of AI stuff. We had compliance and regulation and security and operations and leadership. And I did my session on marketing today, and there was a great one this morning on customer service and retail. So it was great. And Neil's going to be talking tomorrow on, well, I won't steal your thunder, Neil, but I'll let you kind of share what you're going to be talking about in the AI Innovation Series.
Yeah, well, great to be here today. And I'm looking forward to it. I'm probably the least qualified expert on AI, but as a guy trying to impact an industry, I'm using all the resources I have. And so I have tapped into your mind, Eric, and Ben Udell's, and a variety of people in order to allow me to explore the way that the industry responds to new ideas and how to break through. And so I've used.
Lost you there.
Which Eric turned me on.
There you go.
I'm going to switch to a different computer. I think this one, so I'll be right back.
Gotcha. While you do that, I'm just going to provide a little bit of housekeeping, and then we can start chitty-chatting. If you are interested in joining the conversation live and coming up with me and Sean and Neil when he comes back and he switches computers, there's a link on the screen. If you go to www.thelinkedbanker.com/happy hour, That will take you to a page. If you scroll down just a little bit on the left-hand side, you'll see a button that'll say join the conversation live. That'll actually get you the link to the Restream platform that we're using to go live. We're live on LinkedIn, we're live on Facebook, and we're live on YouTube. So we're simulcasting around the world. No, not really, but it kind of feels like it. I guess if somebody was watching someplace, it's possible. I can't imagine that it's probable, but it's possible. But if you want to come up and be part of the conversation and share what's on your mind and ask Sean a question or share some stuff that you've got on your roadmap for 2026 or what you're super proud of. And I was a Rotarian for a number of years, and usually a boast or a brag will cost you $1 if you get to stand up, and it might even be more than that now with inflation, but I'm not going to charge you anything. If you want to show up and boast or brag and something really cool happened, or you're really excited about something for 26, this is a great platform to be able to share that. And it'll get you exposed to being on a live event. And who knows, it might be something that you get introduced within your organization, back at your bank, or whatever industry that you might be in. So welcome. Ben is here, but Ben's not up on stage yet. We'll see. So if Ben hits that link, but Ben's probably had enough of Eric. I'm surprised Ben even showed up because we spent 4 really good hours together today for the GSP program. So, and it looks like, Neil, you've got a new computer that you are accessing this stream on.
Seems to have a little bit better throughput on video than the other one. So hopefully
Nice.
you'll be able to hear me okay.
Good to see you still have product placement in the background, though. I would hate to see for that CorePoint sign to not be present. I just went with the elf on the shelf, the large fat version. And if the batteries were changed, you would see he glows, but he doesn't. He's not glowing a lot. He's been glowing a little too much. I think we forgot to turn him off. So he's run out of battery. So, so before we jump in and kind of nerd out on some AI stuff, Sean is here. I would love, I mean, I know who you are, and I'm a huge fan of you and FedFizz and everything that you guys do over at the Cowboys. But for people that might be living under a rock and not know FedFizz and the Mayo crew, share a little bit. I'd love to hear how the roundup went this year. I couldn't go. I was committed to another event. So talk a little bit about that. And then I'm really curious, what happened in 25 that you guys have been tracking that you maybe think is worth mentioning? And then where do you see things in the world of banking headed in 2026?
Well, first of all, let me disclose that I have a crystal ball.
Nice.
But it's really broken. It broke decades and decades ago. It's like wrapped up with baling wire and string and gum and duct tape. It's in
and
rough.
You know he's from Texas because he said baling wire and string. Yeah. I'm surprised twine didn't make it in there, but yeah, definitely hardcore Texas.
Yeah. So I'm senior vice president here at FedFizz. We actually are a data company. We track all of the banks, credit unions, holding companies, branch data, all the call report data. But what makes it even more exciting is we track all of the tech stack, the vendor data. We've got primary tech stack, which is core, online, and mobile, and then about 12 other secondary platforms, credit card platform, whether or not they're an FI issuer or using a third party, which rails are using, debit processor, so on and so on. It does provide unique insights when you get to blend vendor data with financial data at the bank level and in conjunction with peer analysis. So that's pretty cool. We have a rating system that looks at the health and strength of banks from a failure aspect. And then also we have our Bankers Helping Bankers platform, which is really awesome. There's a fund there that actually invests into vendors that are supporting community banks. That's a really good networking for Bankers Helping Bankers. I'm glad you brought up the roundup because that's actually going to kind of lead into what we're seeing in 2025 and what we're really looking at for 2026. And the roundup was also a streaming success. I'm sorry you weren't there. We missed you. There was a lot of chat about AI.
Oh, I bet.
And I can't wait to get Neil's take on some of this from the AI perspective. And I know at least on our side, we're testing different things and researching and trying to learn. And I think that's probably indicative of most companies and most bankers were kind of in the testing phase and trying to learn as much as possible. Implementation side has been, not quite as robust, but we're playing with the tools and learning. And I think that's a good starting point for everyone. But as far as the roundup is concerned, one of the key takeaways there on our conference was really industry consolidation, and particularly from core consolidation and really modernizing core platforms. That was something that was really talked about quite a bit. Obviously, I think everyone has heard about Fiserv's Core Advance, where they're combining several platforms into one. And I'm going to go out on a limb and try to harness my crystal ball and say that I don't think that's going to be the last vendor that you're going to see this from.
Yeah.
It's tough to try to manage, 14 plus platforms with a declining customer base, right? We're not growing as many banks as what we're losing from M&A. And that is causing the other aspect that we're watching. We've been talking about this for about a year, and we're really seeing this happen right now, is this accordion effect on core conversions. So years ago, and Tanner and Matthew did a great presentation about this, but years ago, if you were looking into a core conversion, right, getting out in front of your renewal date about 12 months or so is probably about right. Then it turned into 18 to 24. And now what we're hearing from the bulk of core providers is it's anywhere from 24 to 36. That's 3 years in advance of your core renewal that you need to be starting these conversations and researching. So that accordion effect with the shrinking of the industry, the number of platforms are out there, it's tough. That's a tough market right now. So that's definitely something that is on a lot of people's mind, including the core providers themselves.
I hear 3 years of preparation before you make a change, and you've already admitted that your crystal ball is broke. So how do you know where things are going to be? Is that a roll of the dice? I mean, how do you know what direction you're going to go, or do you really need to make that decision? It's more of a deciding to make a move in 3 years and then just lining up. What do you want? What are the services? What's the functionality? What's the capability? What's the connectivity? What are the questions to even be asking?
Well, you're hitting all the nails right on the head.
Yeah.
And that's exactly correct. And the core providers are actually very open about it too. It's just, it's a capacity problem in the industry. I think also sometimes I think the core kind of a bad rap. Everybody likes to beat on them a little bit. I'm not immune from that as well. I've beaten on them from time to time as well. But if you think about that, they've got a declining industry base.
Yep.
Core conversions run about 2% or so of the market per year. And then you've got M&A accelerating again. You've got a favorable regulatory environment, which that's going to push us around 4, maybe a little higher than that on a consolidation aspect, 4% plus. So you've got up to 6+% conversions going on all around you while your total addressable market from a charter standpoint is shrinking. That's a tough spot to be in. And, as bankers, we like to beat them in the head and say, man, we need modernization. Well, it's tough to really pump a lot of R&D into that. So it's tough. And it's a slow moving, large machine. But I will say that there's been a lot of things changed over the years, especially in the last few. That was another thing that I noticed, particularly at our Roundup conference this year, when I was looking around the room. There's so many compliant platforms that are out there now that work directly with the cores, and the cores are working very favorably with these platforms. Right. Infinite is one that comes to mind.
Who's that?
Infinite, great company. It's a ledgering type platform, and these platforms are built on lessons learned in the past. The Synapse bankruptcy was just awful. That was something that, from an industry perspective, we all feared that could happen. It wasn't what happens if a fintech goes bankrupt. It's what happens if a embedded middleware goes upside down. And unfortunately, that's what happened.
Yeah.
So as a result of that, and I always kind of, to back up a little bit, financial services moves somewhat slow for a reason, because it has to be tested, proven, and trusted. Okay. We must have trusted platforms out there for the sake of banking in general. Right. So it doesn't move at VC speed. Right. So a lot of times there are conflicting growth strategies involved.
Yeah.
So when that happens, you have an opening in the market, right? And that's kind of where Synapse came in. They plugged a hole, right? There was an easy button right there. And so a lot of entrants went into that space using that middleware type model. Ultimately, it did not work out well, and we're still, we as an industry are still dealing with some of the fallout there.
Yeah.
And I don't know where that ends up with the CFPB and
Sure.
There's a lot of moving parts there. But I do know one thing that I do want to mention. And sorry if I'm like bouncing around different areas.
No, this is good. I've got 2 questions that are in my brain. I'm going to write them down so the old man in me doesn't like forget them, because that'll certainly happen. Then I'll be pissed because I won't remember them, because they were good questions.
But during or shortly after the Synapse meltdown, there was an RFI that came out, and I'm going to apologize in advance. I probably should read this before I talk about it. But there was an RFI, and they actually talked about it being known as the Synapse rule. And it was a question about ledgering FBO accounts, and there was a statement in there that talked about a consistent electronic file format for the reconciliation of FBO accounts. If the bank was using an FBO type platform for the embedded finance side, for the BaaS side, excuse me. And I don't know where that's at today. I'm still kind of scratching my head and wondering, what have we come up with something? And the reason why I bring that up is, R&T was at our conference, and that's something that I know that R&T does on a regular, recurring basis, is they work with the FDIC all the time on reconciling these files. And if you don't know what R&T does, it's a deposit placement program where you can move funds that are in excess of $250,000 on a reciprocal basis, so that you can have additional FDIC insurance on top of the $250,000.
The term Cedars jumps into my brain.
Exactly. Yeah. IntraFi. There's plenty of others out there. Modern Fi. And actually Stonecastle, which Fiserv just acquired not too long ago. But these platforms are important because they enable security for uninsured deposits. They actually become insured. And obviously we learned a little bit about those liquidity problems and bank runs in 2023 on concentrations of uninsured deposits. But anyway, so these firms are doing these daily reconciliations all the time, because you've got to be able to identify, if one of the banks in that platform were to fail, you've got to identify, where is Johnny's money, right, from a past due insurance perspective. So I'm kind of wondering, why isn't that? And I'm sure there's a lot of other things that I don't understand. My wife will attest to that, by the way. But
I got one of those too.
I don't know. Yeah, I don't know why we're not leaning on that type of a model from an FBO standpoint. And those are transactional accounts. So maybe there's something there, but more than likely it's probably something that I just don't understand. But I thought it was an interesting talking point anyway. Interesting.
Yeah. So the 2 questions that I jotted down are maybe looking into the 26 and beyond. So the first question, the number of fish in the sea are getting fewer. The banks are getting consolidated, they're merging, they're getting acquired, and there's still the same number of core providers. Do you foresee that costs are going to have to increase to the banks that are remaining because that infrastructure and that investment in technology and what those core providers are going to need to continue to operate is just now going to have to be spread across a smaller universe? And is that something banks should be budgeting for?
Yeah, I'm going to punt on that one.
You're like, I'm not touching that one.
Yeah, and I mean, it's a great question. It's a very fair question. And
Yeah.
I'm going to tell you the truth. I don't know. I
Yeah.
could see a couple of different ways of viewing that. One way would be looking at like the price of a car. What kind of car, right?
Yeah.
What features does this car have?
Yep.
Are you utilizing all these features? And from a bank standpoint, although the number of institutions may be shrinking, the total assets under management are increasing, right? Banks are getting bigger.
Yeah.
So there's more transaction volume. There's more ways for the cores to make money in this space. And then also there's, emerging trends out there. You've got direct digital banks that are running a sidecar model. That's another way for these cores to expand their addressable market. You've got BaaS and embedded finance. There's a lot of things going on there. There's a fair question, and I apologize. I don't have a direct answer.
One thought on that, and then Neil, I don't know if you've got any thoughts. The universe of banks and potential customers is decreasing, but as economies of scale and technology provides organizations the ability to work more efficiently and effectively.
Definitely.
Does that have an impact? And so they're kind of two sides of the teeter-totter, basically, and we still stay level instead of one of us slamming to the ground because somebody just got off the other side. So
that is definitely the case. Yeah. And the cores are very open. Every time we talk to them, and especially at our conference, of, hey, we're trying. If there's something that you need, reach out to us. So there's a lot of open dialogue.
Yeah.
It's not a one-way street like what it may have been perceived to have been decades ago. It's a very fluid environment, and it's kind of funny. We laugh sometimes. There is this new thing called the internet, right?
What's that?
Yeah, I've heard of it.
What is it?
Yeah. And so, from a banking perspective, one of the things that made community banks unique was their geographic presence. So as we mature into digital services more and more, that one particular aspect doesn't carry as much weight as it used to. So community banks are really looking at other ways to either grow outside of their geographic area or service those customers that are in their geographic area more efficiently and better. So that's what's really driving a lot of the core changes in the marketplace right now.
Cool. Good. Neil,
I'll just chime in on that just a little bit.
Yeah.
I started banking in the 80s, and we were literally told you will not do business with people that you can't look in the eye and shake their hand. So it was not like, it was just not even an opportunity if you were running a bank to do business with people that you didn't face-to-face interact with.
Now you got to prove that they're not a digitally generated AI avatar.
That's right. Yeah, this isn't a bot.
Indeed. So Sean's absolutely right about how the location, the geography was such a big deal. I remember the owner of the banking organization said there were three important things that you have to understand: location, location, location. And that's what we thought community bank was, about the location. Now the community is much more abstract. It's about how we get along, who we find affinity with. That's our community. It's not necessarily the people next door. So that's different.
Yeah, I would agree. I would agree on that. The other question that I wrote down that I wanted to make sure you had mentioned, and I might be paraphrasing, but I interpret it as the ability for these core providers to provide easier access to third parties and not feel like you have to do everything, or, you want access to your data? That's going to be $250,000 for an API connection. Is it getting easier? Because I know a lot of these AI platforms and other technologies, the data is the secret sauce. That's what we want. That's what we need to get access to so that we can then secure it and use it confidentially, but be able to do stuff that maybe can't be done in the cores. Are they giving up access or making it easier and more affordable? And do you think that'll be a trend for next year?
So there was two. I looked at that as there's two different questions there. One is are the core providers making it easier for banks to work with fintechs? And that's absolutely a yes. I don't know of a core that isn't working with an API platform, and they have a list like Jack Henry, Fiserv, Q2, DCI, all of them. They've got lists of fintechs that they work with. They're using APIs all the time to try to help onboard new vendor services for the bank to enhance either commercial or retail banking, or even wealth management for that matter. So that part, yeah, there's a lot going on there. And I think one classic example there is you can point back to Fiserv's acquisition of Finxact, right? So they're really trying to work on the technology side, the actual embedded finance aspect of banking, and making it easier for banks that have found it to be maybe a little bit more challenging to work through the incumbent. I know DCI does a good job of that. There are many other cores that are working on that as well.
Yeah.
To your second question of open access to data, I think we all saw last quarter or so, JP Morgan finally said, yeah, we'll give you access to the data. And we've got 80% of the retail customers in the United States, and you're going to pay for it. They're using their methodology of there's a lot of hits, there's a lot of calls on their system. They're having to manage that, mitigate risk from all of that access.
Sure.
And I understand that. And there's a bit of a tug of war going on from 1033 unknown of open banking versus, okay, we're going to go ahead and move forward, and we'll do an open banking, but it's not free. And so there's a bit of a tug of war there. And I suspect with the current administration, I think we'll see more of the JPM side of, yeah, we'll open this up, but you're going to pay for it.
Yeah. I was wondering if there was some 1033
are very much paying for it. Most of them I think have already got agreements in place. So.
Cool. I was wondering if that had some relevance to 1033. I'm glad you mentioned that with open banking. So
definitely.
Yeah, cool.
And I've got another thing to mention when we start talking about administrations, right? It's and I'm gonna really call out my friend Sarah Beth Felix. Was just amazing from the ALM side of the world, or AML, sorry, BSA AML side of the world. She likes to talk about where, okay, we have regulatory shifts where things are a little bit easier now, but that doesn't necessarily mean that they're always going to be that way. So you still need to be functioning the way you've always been. That doesn't mean let your guard down because, it's not an emphasis right now.
Right.
So I think that goes into play on a lot of different things, whether it's 1033, whether it's BSA, AML, CFT, whatever the case may be. Is even though there's regulatory pendulum swings, it will swing back at some point. So you need to always be prepared.
Yeah, cool. Good. Neil, any other thoughts on that? I guess the answer to two questions, which I had intended to be one, but it's always more than that. So you got your mute on. Yep, you're on mute. I think you went on mute.
No, I don't have much to add. Sean covered that pretty well from my perspective.
Yeah, sounds cool. I was going to say with a name like the Core Point, what are your thoughts on core providers? But I know that's not necessarily the concept of the core point, but it is kind of ironic that we've got that
Well,
sign in the background. And
I will tell you though, when we find out about certain of our prospects using certain core systems, and we say, "Well, that's great. We love working with them." There's always this groan of, "Well, I'm glad you do." You know, but with what we do, we know specifically what we need, and with those major core providers, we know that it will fulfill what we need, and so we understand nobody loves their core, but it's just kind of the state of the situation. So
yeah,
yeah.
yep, absolutely. So, Sean, anything else that's on your broken crystal ball roadmap, predictive as to what whether it's banking or not? Maybe you've got a really cool prediction on something that doesn't have a darn thing to do with banking, and I'd love to hear that too. But what do you see is on the horizon for us in the new year?
You know, I I think
Your
one thing
dog's
that
got some opinions. It sounds
yeah he does he's excited yeah. But yeah, I think one of the things that I think is actually extremely interesting is how the new FOMC committee plays out going forward. We'll have a new Fed chair starting, I think, in June, and I think with the latest FOMC meeting, we've seen a deeply divided group there on what everybody thinks the future looks like from a rate setting, policy setting standpoint. So I think that's going to be very interesting, at least in my kind of financial geek kind of. That's going to be interesting to watch and see how that plays out. Other things, we certainly expect M&A to continue to be a big role. We've seen a couple of BaaS banks getting acquired here recently, including Grasshopper Bank, Green Dot Bank. Lewis and Clark Bank a few months ago announced they were being acquired by a credit union. So we're seeing more and more of that. And then we saw quite a bit in the fintech side, and again from the BaaS sponsor bank side, a lot of churn, particularly because of some of the middleware models that are no longer really effective. And then some of the banks opting out of the space, and so there's quite a bit of churn going on. We see that kind of easing a little bit, but it's not over. There's still a little bit of movement in that space.
Yeah.
And then there was a great announcement. Was it today or yesterday? All my days are blending together, but with Brex and Fifth Third, that was pretty interesting. Where Brex is actually going to be it's an AI type program manager for Fifth Third's corporate card program. That's a big program. And then remember, Fifth Third is in the process of acquiring Comerica, so that's going to be a really, really big institution. Yeah. It was interesting to me because Fifth Third is already a sponsor issuer to the Brex corporate card, along with Immigrant Bank, if I'm not mistaken. So it's kind of interesting. You're seeing some of these fintech platforms really partnering back with some of their banks as a constructive vendor, right? And no longer a challenger type structure, but a vendor structure. So I think we'll see more and more of that as well.
Interesting. Very cool.
I'm hoping for an early spring.
Yeah. I got to push a neighbor out of a snowbank this morning. So I think the Mother Nature has hit northern Michigan pretty hard, and there's no signs of a warm up. But as the proud owner of a snowmobile that I have not used nearly enough over the last 3 years to justify my investment in a snowmobile, I'm excited. I'm actually going to get some use out of it this winter. So,
and I think I saw
pretty pumped for that.
I think I saw your post about didn't you use AI to fix your snowblower?
I did, yeah. The snowblower. Yeah. I was blowing some snow. It was really heavy, and I apparently choked it out. I put too much in it, and it stopped. And of course, I was smart enough to turn the darn thing off and completely power it down. But yeah, I fired up the video capabilities. I had a little conversation with ChatGPT, and she was super kind. She's like, now remember, disconnect the spark plug, safety first. I mean, literally she said that. And then you need to take off the the belt cover, and I said, this black thing, the belt cover. And she's like, yep, that's it. And inside there's a engagement or a retainer pulley, or she's like, you probably just need to adjust the tension or bolt on that. And sure enough, wham, bam, I'm back in business blowing snow. It was awesome. So
Nice.
if this digital marketing thing doesn't pan out for me, I'm going to just do Cook small engine repair, and I'm ready to go.
There you go. There you go. Everybody's got to have a side hustle, man.
Yeah, exactly. Yeah. A little, that's my sidecar, right?
Well, and Neil and Eric, I'm actually, I know you guys are working with the banks, particularly on the AI. Are y'all kind of hearing the same thing that like what we're doing? A lot of testing, a lot of playing. We don't really have any implementation yet. We have some roadmaps and some things that we're looking at, but we don't have anything chiseled into stone. We're still just in the playing around and learning stage. Is that along the lines of most folks you talk to, or are we behind the 8 ball?
Well, I don't think you guys are behind the 8 ball by any stretch. I can't imagine behind the 8 ball and FedFiz would ever exist in the same sentence or paragraph for that matter. So I don't think that's the case. I think there is still a lot of experimentation going on. I think there is I would say a misunderstanding, but I don't think there's an appreciation for how human-centric and important AI implementation is, to be able to look at it as a change management strategy and not a vendor technology risk, pick the right, platform decision. Because you can go through that entire hoop process and pick the right vendor and risk it and know it's secure. But at the end of the day, if the people aren't comfortable with it, if they're afraid of it, if they're hesitant to use it, all of that due diligence and vendor work and privacy and security and DLP and et cetera is just going to sit there. So the human side of AI, I think, is one: training, education. We call it AI intuition or AI literacy, or kind of flexing your AI muscle. You have to understand these are not like any technologies we've ever used before. And just getting a license of Copilot and giving it to your employees and go, okay, go do cool stuff. And then we're going to come back and tell us what cool stuff you did. They don't know how to drive this thing. You've given them keys. I like to say you've given them keys to a Formula One race car, and all they've ever done is drive a minivan. Yeah. And they're barely getting this thing out of the driveway. And they're like, this is dumb. I don't like it. It doesn't work. And so
guys, one way that I've kind of reconciled with this issue is that you're looking at somebody who remembers vividly using VisiCalc on my IBM PC. So, and most people are going, what is VisiCalc, right? So, but before Excel, before Lotus, there was VisiCalc.
You're really old.
I'm really old. Yes, I am. But the reason I bring it up is that we had this aha moment that there was this deterministic software that you could count on. Because if you created a formula in that spreadsheet and you put in a variable, it would create a result that was abundantly consistent. It never flawed. Whatever data you put in it, it would run the calculations, it would do it very fast, and you would get a computerized result. And that's how we think, that's how my generation thinks about computers, deterministic. You put certain pieces in, it runs the algorithm, it's going through a decision path, yes, no. We think of computers as 0 1s, yes, no's. And now all of a sudden, it flips. We're no longer getting deterministic computers. We have non-deterministic. And so for us, we have to step back and go, that's not like my old Apple PC or IBM PC or Apple computer. That's like other human beings. And when my friend James White posted something I really liked, he said, we tend to think about AI as technology that we need to install. Instead, what we should be thinking about, it's a workforce that we need to supervise.
Yeah. Yeah. That's
Yeah.
perfect.
Huge difference.
Yep.
Yeah. Yeah. And that's, I'm glad you mentioned that. That's, I have two quick points on that. One, a buddy of mine, and this was 6 months ago. So in the world of AI, that's eons ago. But he said that, yeah, AI right now is, and he's very, very, very intelligent individual, but he said, yeah, AI right now is kind of like sex in high school. And I was like, what? And he's like, yeah, everybody's talking about it. Very few people are actually doing it. And those that are doing it really probably aren't doing it very well. So I thought that was an awesome commentary. Hopefully I didn't break the internet or get us in any trouble with that comment.
I have so many inappropriate comments that I want to say. If we were together having a beer, I think we could go down a 13-year-old rabbit hole there and just
in an instant.
have so much laughter. But I'm going to keep it clean because this is being recorded. So we're gonna take the high road there.
And
Maybe
then
I'll talk to you later.
The second point of that is really kind of the ability to query accurately and we have sometimes well, let me rephrase that. Sometimes in the past, when I'm running reports and things, I'll get the data and then like, hold on, that's not right. And then, I didn't run the report quite right. It gave me exactly what I asked for, but I didn't query correctly. Right. And so I'm starting to see a little bit of that in this side of the world as well. Of you still need the old guy to look at the data and go, does it pass the smell test? And you can't just wow, look at this cool data. We're going to publish all of this. Like, you got to be careful because sometimes you get exactly what you asked for. Yeah, if you didn't ask correctly, then it's an efficiency machine, and it will also lead you to the incorrect answer very quickly.
Right.
Well, Sean, that brings me to what I just posted in the chat there. My guess is with the two of you experts here, I'm probably not telling a story you haven't already heard, but the plank and the chauffeur knowledge, does that ring a bell with the two of you? Plank knowledge versus chauffeur knowledge?
No.
Wow.
Enlighten me.
Wow, I have hit the jackpot.
There it is.
The plank. Is that what sidewalks were made out of when you were growing up and you lassoed your horse to it? Is that you old guy? I love these happy hours. I can totally
Neil to stump the chumps. That's it.
Exactly.
I'm definitely the straight man in this.
Yeah. All right. Give me some. What's plank and chauffeur? Enlighten us.
So there was an expert. His name was Dr. Planck. This was back over a century ago. And Planck would travel around the world, around the United States, giving his expertise. He had a chauffeur. The chauffeur would take him everywhere. And guess what? The chauffeur sat through his presentations. One day, the chauffeur said to Dr. Planck, I've listened to your presentation so many times, I think I could give it. Dr. Planck said, go ahead and give it a shot. So he gets up there and he was pretty eloquent for a chauffeur and he's given the presentation. And one of the person in the audience asked a question just to probe that. And the chauffeur said, I am shocked that you would have such a pedestrian question. In fact, I'm just going to have my chauffeur answer that one. Chauffeur, would you answer that question for us? Dr. Planck played the role of the chauffeur.
Is that the early days of a hallucination? That's where I thought you were going with that. The reason
it's so critical is that we separate those who have spent the 10,000, 20,000 hours becoming a true expert, which what Sean was talking about, having the insight to know what's valid and what's, I think we're a little off base here. The novice, the superficial who just takes, the AI told me this, it must be true. They get lost very quickly. And actually this came up at Thanksgiving with my family. My brother, who's an electrician, electrical engineer, he was telling us how, AI is just going to create a whole bunch of stupid employees in my company. And I said, well, they're going to get sorted out, because if all they're doing is regurgitating something that the AI told them, it's going to be pretty quick that you realize they don't know what they're doing. And that's where it's a workforce to be managed, not a technology to install and just go, well, let it go on its own.
Yep.
So to me, this issue is very vivid as I see the industry needing to mature into how we use these tools. And the story, what I love about it is this story comes from over a century ago, but it's applicable right now with this technology.
Yeah, absolutely. Absolutely. So cool. Good. That was fun. I needed that chuckle. It's been a long day of talking. I just needed to act like a little teenager for a little bit. So thanks for indulging me there, gentlemen. So, um, so Neil, thinking about the same question that I asked Sean, anything that took place in 25 that particularly struck a chord, or anything that you're seeing in your world on 26 that you think bankers or folks that are listening, either live or going to catch the replay, might want to put on their dance card?
Yeah. I think we talked about a little bit as before I switched computers that in my presentation on AI, I'm going to be talking a lot about how bankers are saying how we use AI, and what really we need to be mindful of is everyone in the world is going to have their phone and is going to ask the same kinds of questions you ask about your snowblower. I'm no expert in a snowblower, but I'm going to get some expertise.
Yep.
And so what's going to happen, every banker who thinks they're going to be the smartest person in the room is going to have somebody sitting there going, well, the banker told me I could get this. What should I ask? What should be my counter proposal be? And the bankers are really not prepared to have people sitting across the table from them who understand the market, understand all their options, and ask questions that are very deep, much deeper than what they've ever done before. So I think that's a big deal. The other thing I think is that this whole concept of the Federal Reserve and how we're setting interest rates. Um, as a person who worked on a PhD in economics, we know that economics is the dismal science. There's a lot of so many variables you can't really do it well. So economists always have on this hand and on the other hand. That's just how it is, because economics is not ever going to be simple and easy. And yet we have an administration who has a very clear agenda of driving interest rates one particular way. And they're attacking the Federal Reserve structure. So it well could be that economics plays out ultimately to change what, if you talk to bankers today, they are only modeling one direction for rates. Mm-hmm. But the reality is, if rates go in the direction that our administration wants, the economy could well position rates higher than we saw in 25, 24, and 25. So this is the time for agility. We also have, as Sean's already pointed out, M&A surging. I mean, just in Omaha, 2 major banks have sold to bigger players, and one bank has bought a bank in Kansas City. Just in Omaha, that's happening. And these are not little banks. This isn't about the little community bank. So these are major financial institutions in our communities that are in play. And so I think about the economy, I think about interest rates, and I think about our society. And I know that's getting really, really deep, but our society has changed. The mentality of savers, which we had before we had all these 401ks. I think at the last happy hour I talked about, remind me if I'm wrong, but I think I brought up the fact that it wasn't until 1981 that we got a 401k. There were no 401ks before 1981. And so that's changed the way people think about things. The way we think about gambling is different. The way we think about managing our transactions is different. And so the reality of finding people who just default to putting money in the bank, here's the way I'm going to summarize this. If you go to a banker and say, what do you think is going to happen if interest rates go lower to your loan demand? They will tell you without any doubt, we're going to get more loan. requests. Because if interest rates go down, it's cheaper for people to borrow money, so they're going to borrow more money. And that's clear. Everyone's on the same page. But here's the other question. Ask them, what do you think is going to happen to the amount of deposits you have if interest rates go down?
Yeah, we're actually seeing that in the data. I think we talked about that last quarter. We were a bit surprised with the past FOMC rate cuts that the cost of interest-bearing deposits had actually ticked up, which, to your point, is really an issue for bankers to think about, even with this most recent rate cut. Used to be in the old days, it was an easy deal. FOMC reduces rates out, your savings rates just went down, like even before they finished the policy statement. But that's not quite the case now. And I think, again, back to that cool new thing that we have called the internet. There's a lot of competition out there for deposits, and I think that's what's driving some of that rate pressure. I'm glad you brought that up. That was a very interesting point that we brought up in last call report data. It was that, wow, the cost of interest-bearing deposits actually increased.
So there's a big difference between correlation and causation.
Yeah.
The bankers who have lived, the bankers who have lived over the last 15 years, for most of that time said, wow, the lower the interest rate, the more deposits we get. Well, folks, that's not economics. The less you pay somebody for something, the less you're going to get of it. Now, you're not going to get more of it if you pay them less. But the bankers have, for lots of reasons, I mean, it was the Great Recession, it was the pandemic, it was all sorts of things. But too many bankers today have this paradigm that if we tell people we won't pay you anything for your deposit, then the people are just going to bring in a bunch of deposits to us. It actually works the other way. The less you pay people for their deposits, particularly in a culture where we've grown to believe, and again, this is societal, this is my perception of society, the US society believes the government's going to protect us. I don't think they think about FDIC insurance like I was taught about FDIC insurance. I think most people think, well, whatever I do, the government's going to protect me. Until they get into Bitcoin and they find out if they lose their code, there's nobody going to reset your password. And so there's all of this stuff is happening in a culture that's not really prepared for the expectation that bankers have. Oh, let's get those rates way down, and then we also know that the wealth of the senior citizen today is gigantic. And they think the senior citizens are just going to keep pushing money into their bank. I don't think so. I don't see it happening. I see the senior citizens going, well, why don't I keep doing what I've always done, which is put my money in a mutual fund that invests in stocks and bonds? Why would I put it in a bank? So I'm a banker, and I hate saying that, but I don't see how bankers are going to win more deposits with lower rates.
Yeah. I had on my short list, because it's also a topic that I sometimes get questioned on, because when you're a nerd, everything that's technology related, you seem to know something about. And this is an area that's not. I've dove into Notebook LM on this topic a lot to try to educate myself. But you had mentioned how people are saving and what they're doing with their money, stablecoin and crypto. You mentioned Bitcoin already. Is that a legitimate thing? I mean, is that something that you think is going to continue to grow in interest? Is that going to really be a competitor? Is that something banks should really be concerned about, this whole Genius Act, compensating deposits or reciprocal deposits, or however it's being described in the last 7 minutes? And if we go over, I'm cool. But what do you think on that?
I'll throw my thought out on that. There's a term that we have now that we didn't have decades ago called FOMO. And it's real. I have a little group. That's a couples group. Most of them are a little bit younger than I am. Yeah, I shouldn't set myself up for that, because you're going to jump on that.
Yep.
But I've had people come to me who have no involvement in finance, nothing like that. But they're really great people, friends of mine. and they're very serious, and they pull me aside and they say, you know, Bitcoin's gone down in value. We're thinking we should jump in. And I'm like, oh my goodness. These are people who 20 years ago would never have jumped into the gamble of Bitcoin.
Yeah.
They would have just, you know, been in the, here's my money in the bank. I'm saving for the future. And now, seriously, she wants to put a big part of her life savings into Bitcoin. That's a real thing.
Yeah. What about you, Sean? I know Dave and Tanner and I have talked about this on a couple of the monthly masterminds that we do for the LinkedBanker, and we've not chatted about that recently. What are your guys' take on this whole Genius Act and stablecoin and digitized deposits? And I'm curious.
So I'm the wrong Mayo.
Are you going to punt again?
Yeah, I want to punt on that one.
Yeah.
I can tell you that those two guys will. I can't speak on their behalf, but I'm certain if they were on the show right now, they would say we're not going backwards.
Yeah.
You're not gonna put that back in the bottle and get rid of it. And that's about the extent of the pontificating that I can do on the subject.
I think the lesson there is educate yourself. Try to figure it out. Research, talk to people. I suspect there's probably some resources that Dave or Tanner have put out on that topic. So I agree. It's not going back in the bottle. It's like AI is not going anywhere. I heard people in the early days, well, I'm not going to worry about this Facebook thing. MySpace blew up and nobody's there anymore. So Facebook's not going to, social media is a fad. The internet's a fad. Email's a fad. That's maybe NFTs and Web3, that kind of got a little ahead of itself.
Was a little weird. Yeah.
That was a little weird. Like, I'm not paying $1 million for a monkey with a do-rag on it. It's just not happening. Sorry. It's not happening.
My take on it, tokenized deposits may be the stronger play. Again, this is not my expertise. I've listened to the presentations. To me, that seems a little more valid. The stable coin thing, we know there's going to be issuance, but to me, it's kind of like when people started out with automobiles. We went from horses to automobiles. There were a whole bunch of people manufacturing automobiles. Well, how many companies sell automobiles today? It's not thousands, right? So I think what's going to happen with the stable coins is you're going to have them, but it's not going to be every bank's issuing their own stable coins. I get
confused, and I know if I'm confused, there's probably at least one other person in the world that's confused. But I get confused on the interoperability. How does that work? If you've got Wyoming issuing their stable coin and then Oklahoma issues a state stable coin, is there an arbitrage? I mean, do I have a foreign exchange issue on stable coin? I don't know. So
interstate foreign exchange. Yeah, that makes sense.
Yeah, domestic foreign exchange. There you
go. Oxymoron.
Domestic foreign exchange.
Yep. Yeah, that's a good point. It's I remember way back in the day seeing some old Michigan notes in the bank's vault. We had some really, really old currency that customers brought in. They didn't know what to do with it. Just, it was more a novelty of anything else, but the states issued their own currency and you couldn't go from Michigan down to Ohio and buy anything because you had Michigan money. That wasn't good in Ohio.
Yeah.
Now they would probably still say exactly that because you know how much Michigan and Ohio like each other because, football and all that jazz, but maybe that's a given, but yeah,
that's another show.
Yeah, exactly. I'm way over my skis on anything sports related, so that's about it.
I think many people see the benefit of instant settlements, and I know we have instant transfers now, but when I'm talking like after hours, and and I think even FedNow they had mentioned that they were looking at a 24/7, 365, but it was years out. Yeah, I was a little surprised by that, and then. For somebody that used to not work in the in the financial industry, as a finance manager and treasury guy, I know doing international wires was just And now it's been 20 years since I've had to do that, but I don't think it's changed a whole lot. But it was just a bear.
Yeah.
It was 4 days on a wire to clear because you couldn't go direct. You've got to go through your U.S. intermediary. They've got to go to their bank overseas and then go to their other. So it was a 4-step process.
Yeah.
That's a real clear use case. No question about it. That's never going back like it was. But for people who live in the United States and operate with other entities in the United States, sometimes I laugh and I go, like, are we going back to barter system? So like, how much babysitting will I give you for the meal that you want to provide? I'm a little confused because, the value of a dollar was set based upon everybody saying kind of collectively, this is worth so many dollars.
Yeah.
And it could have been 1,000 or it could have been one, but a penny was worth something. Of course, they're gone now, but everything had a value based upon collective appreciation of what that was worth.
Yep.
And now if you go away from a currency, the whole thing about barter was it was too confusing. And so we went to a currency so everyone had a stable point of value.
Yeah.
Now if you differentiate that, then you're going to lose the stable point of value. So the irony to me is it all seems to always come back to, well, this is how much it's worth in US dollars. So what are we doing if it's all coming back to it's all based upon the dollar ultimately anyway?
Yeah. An additional contrarian view. We had a guest on a couple of quarters ago on our Inside the Numbers podcast, and he had mentioned that we've tried this digitized store of value in the past. It's called a gift card, and that kind of makes sense. It's usable at any merchant, right? There you go. Yeah.
But you have to pay an interchange fee to get one way or the other. So
okay, $105 you can get a $98 gift card. Yeah,
exactly. That makes total sense.
I love it.
Yeah. Cool. Well, gentlemen, this has been awesome. I never know. It's kind of like the Forrest Gump. It's like a box of chocolates. You never know what you're going to get until you hit the start your stream. And
you've definitely scraped the bottom of the barrel by allowing me on the show. So it can only go up from here.
I'm going to call BS on that, but I know you probably feel obligated to say that. But this is always good. Before we wrap up and say goodbye, those that are watching that don't think that you are the bottom of the barrel. So I know Uncle Sean puts out an update and there's some cool stuff that you post, and I love it when it shows up in my inbox. How do people find you, follow you, and what do you got going on? And then the same question for you, Neil.
So obviously you can find me on LinkedIn, Sean Mayo. I do have an Uncle Sean update. We're going out to about 18,000 subscribers every week. And actually, if you want to just Google Uncle Sean update, you can find me there. Or you can go to fintechcowboys.com and you can sign up for the distribution there as well. And again, it's free. It's content on mainly fintech and how it relates to banking.
It's delivered with an appropriate and sometimes edgy sense of humor. And,
yes.
And I love reading it because there's a lot of banking stuff that you read that's good info, but you're like, oh my God. And I get yours and I'm just like, what's the dad joke going to be? And how are they going to talk about this? And it just feels like you're talking to one of your bros about stuff. And you do a really good job of penning those. And I appreciate them.
Yeah, appreciate that. Thank you.
Yeah. So Neil, what about you? I know we're going to be together tomorrow morning for the GSB AI Innovation Series. So, but you got a newsletter, or how do people keep in touch with you?
Yeah, so I put in the chat, I put my Blink Me contact information, which has my YouTube channel. It's got my email. It's got my website. It's got more than what anybody's really going to want. But yeah, it's out there. So coming from those days at the IBM PC that y'all made fun of me to today. So right there with you.
There you go. And if you don't follow him, he's going to get his plank out and he's going to smack you upside the head. Oh, well, lastly, if you're interested in LinkedBanker, it's a mentoring and a mastermind program that we have for banking professionals to help teach you how to build a brand and be a subject matter expert. I'd love for you to learn more. We do these live happy hours for anybody, but we do private monthly masterminds, one Wednesday a month, where we bring in people and they're only for us. And we've got a community with all of the recordings going all the way back to 2020. And so we're building that out. It's kind of like a mini version of the Bankers Helping Bankers Network. And so would love for you to check that out and learn a little more and maybe join us as well. So Neil, one more thing
before we go.
Thing.
I cannot believe that we didn't shame Ben Udell into appearing. He's on the LinkedIn chat. He says he's
there.
Watching. He's just watching over us.
I was going to say, he is probably about as talked out as I am. And he had a session this morning and then facilitated mine. And I was on his session. And then, so yeah, both of us, we got done after my session. He's like, I'm tired. I need to. And so I was like, well, if you're not doing anything at 5 o'clock, so I'll give him a pass. Ben, you're cool. It's all good.
Good point. Good point.
It's all good. So it's just good.
Thanks, Eric.
So anyway, guys, this has been a pleasure. Merry Christmas. Happy New Year. All that jazz. You both have been part of my year and have helped made it pretty kick-ass. And I've learned a lot from both of you. And I appreciate that. And several others who've been on these in the past. I look forward to these. I don't know what's going to happen or who's going to show up, but I know I'm always going to have some fun and a great conversation. And I appreciate that. So, and hopefully you have as well. So with that, I will bid you adieu. Tell everybody that you know that I know. Hello. And we'll see you in 2026. We'll see you tomorrow morning, Neil, but if not before. Bye, everybody. Thanks for joining.